come up with something that is different for our clients. It isn't all about price. If you can come up with something that is innovative, that is different, that is going to create true value for clients, is going to pick a bit of risk that they're not transferring into the insurance market and see whether you can capture that. That's the stuff that's going to really make a difference for you as a market.
Welcome to Global Marketplace Insights by Willis, a WTW business, a podcast series showing the latest trends from the specialty and regional insurance markets.
Hello and welcome back to the Marketplace Insights podcast series. I'm Simon Delchar, Global Head of Placement for Willis, and I'm delighted to be joined today by Alistair Swift, otherwise known as Swifty, CEO of Willis UK and Global Head of Specialty, and Neil Harrison, Global Head of Claims. Swifty, when we spoke last quarter, we talked at some length about the underwriting community and their desire for growth. Have you seen any change in that in the last quarter?
Simon, only just to say they're probably even more aggressive than they were with what we saw last quarter. I still think there's a lot that haven't quite hit the growth targets that they were looking for as they went through this quarter end. And I think they're going to continue to have that ambition through the end of the year. Certainly from what I'm seeing at the moment, I think that hunger is definitely there across the market, whilst, the combined ratios are where they are, whilst you've got reinsurance costs going down, you've got yields going up. I think they're going to keep pushing for top line revenue growth because, they've got an ability to be able to absorb the, decreases that are coming through from a rating perspective.
There are pockets, I guess, where the market is not in such free fall, if you like. I think D&O seems to be slowing down, cyber seems to be slowing down, aviation maybe flat, depending on who you talk to, and of course US casualty. I saw that Everest came out with some comments the other day about the future of US casualty and whether it was indeed sustainable to be insured going forward. Anything to add to that?
Yeah, I mean, it's interesting. You run through all of the markets, and at any given time, we're going to have pressure points, right? Is somewhere because there'll be loss of activity or claims inflation or a lack of capital because of someone pulling out, and it will hit a specific area of the market. And when we talk about this hunger for growth, it's more, I'm going to say, across the broadest spectrum of insurance and underwriting that we're seeing. There are still going to be areas which are going to be tougher than others. But I think even in some of those areas that we've talked about, aviation is an interesting one, right? We still see, even after the war losses that have come through, some reduction in war rates coming through. On the marine side of things, there was lots of chatter around the marine war rate changing, but it didn't really happen, right? I mean, that was people mouthing off about what was happening in the sector versus getting into the detail for specific clients, because most war covers are placed on an annual basis and you have to issue notice if you want to change the pricing. Well, that didn't happen. So the market will constantly try and talk up areas of the market, and they're going to keep talking about areas that are stressed and under distress. And then there's the reality of the commercial environment that we're in, which is potentially, slightly different. And it only takes a little bit of overcapacity for rating to come under pressure in any of those areas that you mentioned. And that's the fragility of, sort of supply and demand and a little bit of oversupply. And, funny old world, pricing comes under some pressure. So, one of the things we've been encouraging everybody to do is just because something was like this last week doesn't mean it's like that this week or it's going to be like that next week, because it is going to shift and be pretty vibrant. But underneath it all, insurers have got a desire for growth through the cycle because they're still in a pretty good place from a overall market condition perspective.
Which makes it very difficult to navigate as a broker, because you just don't know. There's no consistency in the market. One day, as you say, you'll get one result, and the next day you'll get a different result. So finding the bottom of that market is very, very challenging indeed. Neil, if I can bring you in. So the market is generally softening. Are you seeing any different behaviour from insurers on the claim side?
I would say not yet, Simon, to be honest with you. I mean, I think, there's often a discussion, when the market tends to soften, does it get easier to deal with the claim situation? And I would say we're not seeing that at this point. I think we are still seeing, as we did in the first quarter of this year, and we talked about this in the Q1 podcast, a lot of challenges around claims. Some of that's driven by the geopolitical environment. Some of it's driven by the social inflation issues and so on and so forth. We are still seeing a fair amount of complexity and challenge around even simple claims, to be honest with you, a lot of lawyering up and so on and so forth. So we're not yet seeing some of the theoretical benefits in the claim space that do come from a market time like this. I think you've already alluded to the aviation issues. The conversation around US casualties sort of segues quickly into social inflation. Those macro factors are still there. So as Swifty said, whilst insurers are looking for growth and there are elements of the market that are softening, some of the bigger macro topics still drive the level of challenge on the claim side.
So are you seeing insurers generally be more receptive to, if that's the right word, to claims in terms of their first move on a claim? Are they... is there a change in attitude there because they are under more pressure? And from a placement perspective, obviously it makes sense for us to trade with those markets who respond in the most appropriate way when a claims notification comes in, if you like.
Look, I think there's still some push-pull in the market, right? I don't think that most insurers are rushing towards us with settlement offers, but I do think some are more receptive than others when we, on behalf of our clients, reach out. We are pushing very hard, frankly, as we always do, for interim payments and advance payments. We're pushing very hard for quick coverage decisions so that the volatility comes out of the conversation. We recognize there are still complexities around the conversation on quantum that has to go on. But again, I do think that markets are starting to show differentiation. Some come into the table and some not. Again, it's not a one-size-fits-all answer. It's not all lines and it's not all geographies. But there are some that are, to use your phrase, Simon, more receptive than others. The encouraging thing for us as well, and obviously the three of us and others are driving this as well, is that clients increasingly are asking us for insights on the claim performance of insurers as they select markets, right? And I know all of us, along with issues of premium, financial stability, rate and terms, we would all encourage that because I think at the end of the day, I hate the phrase, but claims is where the rubber meets the road.
Yeah, I think it's the ultimate differentiation. Essentially, it's the service, the ultimate service that our clients buy. And if markets don't perform on claims, then what's the point of everything else, frankly? Another point of differentiation, as you quite rightly say, is price. Swifty, what about other areas of potential differentiation? Claims, pricing, is that it, or is there more to it than that?
Frankly, claims, in my mind, has always been the most important, right, in there. And I agree with pricing, but I think you're going to have coverage that is going to start coming into bear. You're going to have actual service standards, right, just in general, right, ease of access. And the other area that I think is vital for insurers is actually to take us seriously when we talk about what they need to do, right? So, one of my big frustrations at times has been, insurers ask us how they can grow with us and we tell them, and then they totally ignore it. Well, maybe listen to the advice, right, that you're being given. Is definitely one of the things, and then similarly, I'd ask all our colleagues, push our insurers to come up with their best terms first, right? Because they will lose out if they constantly try and play the game in this marketplace. This isn't a marketplace where you can afford to play a game as an insurer. You'll just get left behind. So I think that's very important for us to make sure we're messaging to markets, and then finally come up with something that is different for our clients. It isn't all about price. If you can come up with something that is innovative, that is different, that is going to create true value for clients, is going to pick a bit of risk that they're not transferring into the insurance market and see whether you can capture that. That's the stuff that's going to really make a difference for you as a market. And then finally, breadth of offering, I think, is really important for them too, right? Because, lots of our clients are looking and saying, right, okay, they want to see insurers involved in more than just one area of their insurance. And as they think of their spend, they want to aggregate it with those people who they think are good claims payers, are innovative, do provide good service, are going to be flexible around what they do from a sort of coverage and excess point perspective, and are here to stand the test of time. So, we don't talk about it enough, but the financial stability of an insurer actually, when we're thinking of longer tail business is vital. And we see, these plethora of MGAs that are popping up, day in, day out at the moment. Great, right? And fantastic. But are they going to be there in 5 years' time when you've got the difficult claim to settle? Yeah, let's see, right? And I do think that's a big issue for us, and we need to think of those insurers that are going to have longevity when we think of our clients too.
And I think on average, the average claim from an MGO takes twice as long as an open market claim. I think just before we close, it would be remiss if we didn't talk about geopolitical events. Neil, have you seen any claims activity yet? Have you had anything reported as of yet, or is it a bit too early?
In some ways too early, but if we take a quick step back, and you guys have alluded to this already, right? I mean, so in some ways the most noticeable claims topic arising from the geopolitical environment has been the UK High Court decision on the aircraft leasing claims and everything that followed on with that. For people who aren't aware, aircraft leasing firms won a multi-billion-dollar lawsuit against insurers related to aircraft stranded in Russia. And basically liability was moved, or the responsibility was moved from all risk insurers to all risk insurers. What that has done has triggered a lot of questions about how war risk exclusions apply in other risk classes. The advice that I think we would always give there is read the policy, understand the policy, and talk to us about what your wording actually means. Again, as I said earlier, there's no one-size-fits-all answer. I think, Simon, the other geopolitical components in claims world right now, sanctions still an issue, still a frustration. I think insurers and counsel, and sometimes us, can do perhaps a better job in explaining to clients what the sanctions issues really are, and not allowing one sanction issue on an overall claim to get in the way of broader progress. But you can progress the rest of the claim with the sanction issue as very much a to be resolved later when the environment allows. So sanctions is still out there. Tariffs, if you think of tariffs as a geopolitical issue, which I think many people would, we haven't seen the complexity yet, but we know it's coming. The issue of tariffs and the volatility in tariff rates is definitely going to complicate business interruption conversations as we go forward. How do you value a claim on any particular date given some movement around tariffs? That's going to be an issue. And again, if you sort of spin from that a little bit, there are definitely increased costs of claims associated with the global supply chain, parts, labour, particularly perhaps steel, timber, glass. They're sort of the three primary components of that. So values are going up. And you can certainly draw a line all the way back to geopolitics as the sort of the macro that sits behind all of that, and global interconnectivity as well. But I think we're all now realizing it's very clear. Something happens in country number one that has a domino effect around the world on our clients, and understanding that supply chain issue and everything that comes with that is increasingly important. Linking back very quickly too, I would say on the insurer side, the expectation as we think about this complex environment, just like we promote specialization, we need insurers to be equally specialist and understand the clients that they are writing with us. And again, that's important at the placement time. But again, another area of claim differentiation, I think, for the insurer community is to put specialists with specialists and understand not just, here's the four corners of an insurance policy, but what does this mean to the client's business, industry, segment, and have some sort of commercial empathy, frankly, with the person on the other side of the table.
Swifty, have you got anything to add on the geopolitical environment?
I think Neil covered most of it. I mean, actually, the one thing I did want to say is for all of our colleagues is don't believe necessarily what you read in the insurance press, right? Speak to your colleagues, right, around the world as to what is actually going on versus what you're reading in the press, because there are some quite misleading articles out there around what's happening with rates, what's happening with capacity, what's happening with losses. Go find your specialist internally. We've got loads of them. We've got great people within this company who have their finger on the button of what is going on around the world, and use them, and don't rely on the insurance press for your up-to-date information that you're giving to clients, particularly around these types of issues, because they change on a daily basis. And the moment that article's printed, it's out of date.
And we're back to where we started really as well, Swifty, and that is it all. It's an opportunity for growth for insurers as well. So, gentlemen, Neil, Swifty, thank you very much for your contribution on this episode of the Marketplace Insights podcast.
Pleasure. Thank you, Simon.
Thanks, Simon. Thanks.
See you next time.
Thank you for joining this WTW podcast, featuring our latest global market commentary. WTW offers insurance-related services through its appropriately licensed and authorised companies in each country in which WTW operates. For further authorisation and regulatory details about our WTW legal entities operating in your country, please refer to our WTW website. It is a regulatory requirement for us to consider our local licensing requirements. The information given in this podcast is believed to be accurate at the time of publication. This information may have subsequently changed or have been superseded and should not be relied upon to be accurate or suitable after this date. This podcast offers a general overview of its subject matter. It does not necessarily address every aspect of its subject or every product available in the market, and we disclaim all liability to the fullest extent permitted by law. It is not intended to be, and should not be, used to replace specific advice relating to individual situations, and we do not offer, and this should not be seen as legal, accounting or tax advice. If you do intend to take any action or make any decision on the basis of the content of this podcast, you should first seek specific advice from an appropriate professional. Some of the information in this podcast may be compiled from third-party sources we consider to be reliable. However, we do not guarantee and are not responsible for the accuracy of such. The views expressed are not necessarily those of WTW. Copyright WTW 2025, all rights reserved.